Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about AT&T Stock, ticker symbol T. So I hope you guys enjoy it. Overall, I hope you guys learned something. And if you have any questions, go ahead and ask them down below. Also, don't forget that you guys can sign up with Moo and literally get a free stock just by signing up. So make sure you guys check them out. Roll the intro, let's go. Bam! So we all know AT&T as being one of the dividend kings, and we all know AT&T as being a long reliable history that has slowly increased their dividend and has a nice solid dividend yield of around 7%, which is extremely high. That's why it draws a lot of dividend investors and a lot of income investors to their stock. But what you might not know about AT&T is they own quite a bit of stuff in the movie world. They do own Warner Brothers, they do own HBO, and they do own Tuner. And I do think this is a really cool thing that they have. They did pay an extremely large amount of money, over $85 billion for all three of these businesses, but I do think the future for them is actually pretty large. So AT&T just released their earnings and they did make around $40 billion, and that is an extremely large amount of money due to everything going on right now. Now, their past earnings is around 42, 43, 35, so honestly, they're not doing too bad, and actually a lot of sectors that they have actually done pretty decent, such as business communications, which has actually slowly increased over the time being. Now, this earnings report, they did announce that they were actually profitable, and they made around $188 million, which is great because with everything going on with the whole economy, with the market, it's really nice to see that they're actually making money, they're profitable. And this is probably due to the Fed dumping a ton of money into their company and due to really interest rates, bond rates being extremely low so they can really refinance, kind of stretch out their long-term debt. And I do think they're playing everything right and the CEO is doing a great job. So now let's actually go ahead, turn to the computer, look at support, resistance, where I see the stock in the future. So I hope you guys enjoy it. Let's go. Bye. Alrighty guys, so we have ticker symbol T here. This is AT&T. So now you guys can see this stock literally exploded all the way back in the 90s, went from around $16 all the way up to around $60 per share. Fell off pretty hard, and as you guys can notice, the stock really hasn't fallen under this $20 mark. So that's really what you call a support line. This is pretty much when a stock has tendencies to get buying pressure in that zone. Now, another thing to look at here is this RSI. This is the relative strength index. So this really determines if a stock's overvalued, undervalued, and kind of everything in between. And when a stock is all the way down here in the 30, that means it's undervalued. So this is where you'll have tendencies to see buying pressure. When the stock is over the 70 on the RSI, this is when you'll have a tendency to see selling pressure. So it really determines kind of where the stock's at, how fast it's moving up, and everything like that. So really, me personally, I think that this is a great stock to get into for beginners. This is a perfect beginner stock. They do make a ton of money, they are profitable, and you get paid a fantastic dividend. I know that you guys should never chase dividend yields, but this stock's a little different. Due to this is a blue chip stock. This company has been around for a very long time. They have a long, reliable history of growth. And you guys can clearly see that this stock is honestly kind of one that kind of just trades sideways. Really meaning it's not exploding up and it's not falling down. It's really just kind of bouncing in between this $23 mark and around this $40 mark. And obviously, you guys can definitely make trades of it. But me personally, I think that this is a great stock to actually get into right now. You know, right now it's at almost $30, $29, and it did hit lows around 26. So I do think that right now we are only, a couple dollars off its lows. Once everything kind of gets back to normal, and honestly, people are going ahead and they're using HBO. They're actually using Warner Brothers. And I understand Warner Brothers actually got hit decently hard because they can't make any movies. People aren't actually going and seeing movies right now. But I do think the future for it's pretty large. And I do think that this is a great long-term stock to get into. And I always say drip. Really what that means, any dividend you get, especially with these ones that have a very, very high yield, I would highly recommend reinvesting those dividends. How I would go about this strategy of investing is I would use the simple strategy, dollar cost averaging. So if let's say you guys have $200 to invest in AT&T, go ahead and buy, one share a month for the next year or so. What you're going to do is you're going to get a good average price. So that is it though. I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash the like button. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and overall stay safe out there. We'll see you guys tomorrow. Take care. Bang!